It always begins the same way, with a rise so powerful, so confident, so unstoppable that people believe the good times will last forever. Every empire starts with real strengths, productive strength, military strength, moral strength, but the greatest danger isn't war or rivals or even corruption. The greatest danger is what happens when an empire stops creating real value and starts living off illusions instead. And that illusion has a name: financialization. But first of all, leave a comment below telling us which country you're watching this video from. I'd love to know how far this message is reaching. Now, imagine standing in the heart of a once great empire. Towers are rising, markets are buzzing, money is flowing as if from an endless fountain. Everything looks prosperous on the outside, but underneath, something is rotting slowly, quietly, almost politely at first. That hidden rot has taken down kingdoms, republics, dynasties, and superpowers for more than 3,000 years. And today, it's happening again. The story begins with productivity farms, factories, innovation, expansion. Hard work fuels growth. Growth fuels wealth. Wealth fuels confidence. And confidence fuels overconfidence. This is where the slide begins, though nobody sees it yet. Not in Rome, not in Britain, not in the Ottoman Empire, not in Spain, and not in the modern world either. At a certain point, the leaders of an empire realize something subtle but devastating. It is easier to extract wealth than to create it. Why build when you can borrow? Why innovate when you can financially engineer? Why produce when speculation pays more than sweat? The shift seems harmless at first. Banks expand, credit grows, debt becomes normal, new financial instruments emerge. People get richer on paper. The economy becomes more sophisticated, more complex, more abstract. But the real economy, the farms, the factories, the workers, slowly loses its place at the center of national life. Historians call this the financialization stage, and if you track it through civilizations, it appears like clockwork. In the late Roman Empire, aristocrats abandoned agriculture and poured their wealth into rents, fees, and financial extraction. In the Spanish Empire, officials manipulated silver inflows instead of nurturing industry. In the Dutch Republic, trading houses overtook production. In Britain, finance eventually overshadowed manufacturing. And in the United States today, financial services represent a massive share of GDP. While essential industries increasingly rely on imports, financialization always promises prosperity without effort. It encourages consumption over creation, renting over building, speculation over production. It feels like growth, but it isn't. It's just recycling the same money through ever more complex channels while the foundation beneath slowly cracks. And here's the tragedy. Financialization always comes disguised as success. The numbers look good. The currency feels strong. Markets rise. Real estate soars. People feel richer. Politicians celebrate. News anchors cheer. And ordinary citizens fall into a dangerous belief. If the charts are going up, everything is fine. But charts lie. Numbers can be manipulated. Prosperity can be faked. And no empire has ever survived on spreadsheets. Once this process starts, the culture shifts. Work becomes less valued than influence. Engineers lose status to bankers. Builders lose status to production loses status to speculation. The empire becomes addicted to easy money, cheap credit, foreign capital, and financial tricks that hide the erosion of real strength. Meanwhile, the debt grows to silent enemy that always wins. Politicians promise what they cannot pay for. Citizens expect benefits that cannot be funded. Wars are financed not with taxes but with borrowed money, and the economy becomes a glass tower built on top of a sinkhole. Eventually, the empire reaches a point where the financial economy is many times larger than the real economy that supports it. Actually, that moment collapse becomes just a matter of time. But collapse never begins with a bang. It begins with whispers, a failed auction, a shrinking industrial base, foreign buyers stepping away, currency losing trust, capital flowing out instead of in, rising inequality, social tension, corruption disguised as competence, elite denial, public anger, a growing sense that something feels wrong, even if nobody can quite explain it. Every empire in history has gone through this psychological moment, the feeling that the walls are shaking, even though everything still looks strong from the outside. Financialization doesn't just hollow out the economy. It hollows out culture, discipline, responsibility, and national unity. It divides the rich and the poor, the productive and the unproductive, the insiders and everyone else. It creates an illusion of stability right up until the illusion breaks. And when it does, the collapse appears sudden, but it never is. It's simply the final phase of a process that took decades to unfold. Now, the most chilling part is this. Financialization always leads to the same turning point. Empires rarely understand what's happening to them until they re-standing on the very edge of the cliff. And the great irony is this. The warning signs are always visible. They're always measurable. They're always predictable, yet they are almost always ignored. To understand how the dangerous game of financialization turns into a full-blown currency crisis, we have to follow the chain reaction that has repeated itself for millennia. Everything begins with debt. Mountains of it. At first, debt is used to fuel growth and prosperity. Then, it's used to fuel maintenance, just to keep things running. Then, it's used to fuel survival. And eventually, in the final stages, it's used to fuel denial. Empires borrow not because they are confident, but because they are desperate. The borrowing becomes structural, not temporary. Instead of investing in building the future, it becomes a way to pay for the present. This is the stage where the empire's currency becomes incredibly vulnerable. Foreign investors, who once trusted the empire's stability and power, start to get nervous. They see the rising debt, the shrinking industry, the political dysfunction, and a society that seems addicted to consumption instead of production. Confidence, that invisible pillar holding everything up, begins to slip away. Suddenly, the empire has to offer higher and higher interest rates just to convince anyone to buy its bonds. For a little while, this trick works. The higher yields bring in new buyers looking for a quick profit, but it's always temporary because the underlying problem has gone away. No empire can borrow its way out of a hole it dug for itself through financialization. And then comes the catalyst moment that historians later look back on and describe as the snap. It could be a failed bond auction where nobody shows up to lend money. It could be a geopolitical shock, a failed war, or the loss of a key trading partner. Maybe it's a commodity crisis, or a credit downgrade from a rating agency. Or it could be something as simple as a global shift in sentiment, a collective feeling that the game is up. Whatever form it takes, the moment foreign trust disappears, everything changes. Look at Britain's decline after World War II. It was the loss of global naval dominance, capped off by the humiliation of the Suez Crisis. For the Spanish Empire, it was the collapse of silver flows from the New World and a shift in global trade routes that left them behind. For the Ottoman Empire, it was repeated debt restructurings that completely destroyed investor confidence. And for the mighty Roman Empire, it was the inability to defend its vast borders while the value of its currency was being deliberately destroyed from within. Once that confidence breaks, the currency begins to fall. A falling currency makes imports more expensive. Expensive imports create inflation. Inflation forces the empire to borrow even more money just to stay afloat. And borrowing more money weakens confidence even further. It becomes a death spiral, a self-reinforcing loop that cannot be stopped with optimistic speeches or political promises. This is what we call stage 6 in the pattern of collapse, the currency crisis. When a currency crisis unfolds, the financialized economy is always the first to collapse. The stock market crashes. The bond market implodes. Real estate loses its value. Credit freezes up completely. Banks start to panic. And ordinary people rush to protect their savings. But often, it's already too late. But the real economy, the one where people live and work, suffers even more. Factories close their doors. Businesses fail. Jobs vanish into thin air. Goods become scarce on store shelves. As citizens grow desperate, protests erupt in the streets. Political factions, once united, turn viciously against each other, and that is when Stage 7 begins. The social and political unraveling. Every empire handles this final stage differently. Some break apart into smaller states. Some fall into the grip of authoritarianism. Some experience violent revolutions. And some just slowly fade away into erasure. But the one thing they all have in common is this: none of them ever return to their peak. What makes financialization so dangerous is that it gives people the illusion that nothing is wrong, right up until the moment everything is wrong. During the rise of an empire, wealth comes from real things: innovation, production, and social unity. But during the fall, wealth comes from speculation, from leverage, from division. Eventually, the empire becomes a place where everyone is trying to extract wealth, but almost no one knows how to create it anymore. It's a silent transformation, one that citizens can feel long before they can understand it. They sense that the economy doesn't work the way it used to. They sense that their money buys less and less each year. They see that opportunities for their children are shrinking. They feel that the political class is completely detached from reality, that the financial system feels rigged, that the very rules of the game are changing right underneath their feet. Financialization is the great hollowing out. It's the moment when an empire becomes rich in numbers on a screen, but poor in actual substance. The real tragedy is that financialization convinces empires that they are invincible right before they fall. It blinds them to the declining trust, the rising fragility, and the decaying foundations that will eventually bring the whole structure crashing down. But here's the most important lesson of all. Collapse is not just an economic event. It is always a moral, cultural, and psychological one. When a nation stops believing in the value of real work, real production, and real responsibility, its decline becomes unavoidable. And yet, history also teaches us something else, something quietly hopeful. Collapse is not the end. It is the clearing of the field. After the fall, new systems emerge, new ideas rise, new leaders appear, and new nations learn from the mistakes of the past. The cycle ends, but life goes on. People rebuild. Strength returns, and the world moves forward. If history repeats itself, it is only because we refuse to listen to its lessons. But if we listen now, if we truly understand the warning signs, the patterns, the illusions, we might not be able to stop the cycle entirely, but we can prepare for it. We can adapt to it. And perhaps we can even help shape what comes next. And maybe, just maybe, that is the real lesson that every great empire in history failed to learn. If you found this story thought-provoking, share your own perspective in the comments below. Your voice matters more than you think. And together, we can explore these patterns with honesty, with clarity, and with a deeper understanding of how the world truly works. Thanks for watching.